Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. Markets are off the highest point of the day, and the Nifty is trading around its 50 DMA. All sectoral indices trade with gains, while for a change, broader markets are underperforming today. Tata Motors is the top Nifty gainer. Edelweiss has upgraded the stock and also raised the target price. Bajaj Finance reports a 52% growth in its net profit for the third quarter. Asset quality remains flat, while provisions and slippages rise sequentially. And metal stocks are staging a rebound in today's session. Most components of the index are trading with gains. Good afternoon, Neeraj. It's been a good rebound. At least we've sustained the gains that we've seen throughout the day today.
Yeah, it's looking pretty good for the financials as well, Navneet. The latest set of numbers that have come out from Bajaj Finance only instill that some more confidence, and that spike that you're seeing, you could partly argue that that's courtesy. The kind of numbers that the big boy from the NBFC space has shown. The stock has gained a bit as well. Before I move to the index, just want to bring up Bajaj Finance intraday because the stock has surged. The slippages number a bit high, yes, but look at that uptick that has come into the big boy. This is live highs for Bajaj Finance at 4366, 153 points and counting, 3.5%, and doing very well for itself because the numbers by and large in line. And if anything, there has been positive surprises. Yes, there is a think around slippages, but if indeed the Carvi account would have played a factor there, then the market would probably discount that. Having said that, the heat map should come up on your screen because lots more beyond Bajaj Finance also is moving in trade. Tata Motors, as the headline stated, up about 5.5%. But that's not all. The telcos have shown a bit of a bounce, with Bharti Infratel in particular moving up. HDFC Bank from the heavyweight financial space is up about 1.5% too. So that is adding on to the gains. There is some strength in JSW Steel. ITC is gained a little bit in trade today as well. And Reliance is not falling. That's the big thing in the session today. Not too many stocks correcting too. I mean, Aisha down 4.5, yes. TCA is about 1% lower. But that's few and far in between. We don't have too many losers, to be honest, in the session today. The afternoon and the morning have belonged to the gainers. The broader in the spectrum, and just bring up the mid-cap and the small-cap indices and the kind of stocks that are moving around in trade there, because it'll be interesting to see what that end of the spectrum has done as well, because the large caps are doing really well for themselves, but the mid-caps and the small caps are the others. So flattish moves, especially for the small cap space. The mid-caps about 0.25%. Had a bit of a surprise because usually the last few days we've seen this space do much better. But let's identify a couple of gainers and movers there. M&M Financial Services on the back of the numbers up about 4%. Dalmia Bharat has inched up a bit. The interesting bit is Cummins, which is up about 3.5%, but off the highs of the day. Godrej Properties another 2.5% up in trade. Quest Corp results day up about 1.5%. What's not done well, but Varun Beverages sees some gravity. It's had a fabulous move the last 20-25 odd days. Just a bit of a pullback. Glenmark pulls back a little bit and Prestige pulls back a little bit. So those are 2 or 3 names. Real estate by and large is having a slightly iffy day. Last but not the least, the small cap space, and should come up on your screen as well. Not too many. Balrampur Chini gains a little bit. ITI gains a little bit. And what loses out is Spandana Spurti after the numbers, down about 7%. Godfrey Phillips, reason to be under pressure, down. And Karur Vysya Bank and Radico Khaitan see some bit of a pullback in trade. What about the more liquid universe, though, Navneet? How is that looking?
Neeraj, we've already recovered 50% of last 2 days' losses. So it's been a reprieve sort of. I think even the global markets have seen a turnaround. The European indices, I think they're having a good session after the losses that we've seen for them as well in last few days. There you go. All 3 key indices there sitting with some amount of gains. And for us on the futures and options side then, tomorrow being the expiry day, volatility has cooled off today. So that's a positive sign for the bulls. But the rollovers have picked up. For Nifty, 36%. The January series also indicating some build-up. Let's see if at lower levels of 12,100 there was some long positions taken or not. For Nifty Bank, I believe there has been a build-up of about 10 to 11% for January futures, and the rollover there also stand at about 34%. But what levels to watch out considering tomorrow is the expiry day? So talking about the individual strikes, you've got the 12,100 call there. That's seen shedding of about nearly 9 lakh shares. So as the index is trading above that mark, you've seen the call writers running for cover. That's a positive sign. And fresh put writing coming in for strikes like 12,100, which has seen addition of about 18 lakh shares. And you've also got the 12,150 put, where we are trading currently. That's also seeing fresh writing. So a premium of about 30 points there. The writers of the strike will be still safe if the index falls 30 points from the current levels. That will be somewhere about 12,120. So the range for tomorrow remains 12,050 now to about 12,200. The base has definitely moved higher with today's bounce. Individual stock, Tata Motors has bounced back. It snapped the 3-day fall. It's back above the 50 DMA. Futures indicating long positions. And today's gains could also be on account of the upgrade it has received from Metalwise. In fact, a sharp increase in target price to 245 from 140. And after a while, you're seeing ITC, contributing to the gains that you're seeing on Nifty. Long positions on the futures side. Looking at the data closely, 65% of the quantity traded so far has been marked for delivery. That's a positive sign telling you there is cash-based buying happening here. And look at that, January futures open interest is up 28%. Tomorrow is the expiry, and I guess they come out with the numbers on Friday as well. So watch out for ITC. And you've got Eicher Motors, which is corrected in last 1 hour of trade, I believe. The stock's now trading below its 100-day moving average. Of course, futures are indicating fresh shots, but if the intraday chart can come up for Eicher Motors, that's going to give you a better picture as to what has happened just in last 1 hour of trade, as it's sitting with cuts of about nearly 4 to 4.5%. There you go. It's sitting at day's low, just above the mark of 20,100, Neeraj.
It's been very iffy, Eicher Motors has been. By the way, some more numbers. A small name, Navbharat Ventures, down about 5.5 to 6% after the numbers have come out as well. The star of the afternoon has to be Bajaj Finance. So this one is cracked after the numbers, but well, there's no taking away the fact that the large caps and quality names are making a bit of a comeback in the session today. Well, good time as any, of course, to get an important market voice. Jitendra Gohil of Credit Suisse Wealth Management joins us right now on the show. They've come out with a note which speaks about the possibilities of the broader markets performing. But Jitendra, before we get to that, lots more to talk about. Thanks so much, of course, firstly for joining in. The standard question at this time of the year, when a guest joins in, do you expect the budget to be a market changer or more of the same and a bit of a continuity?
See, we maintain that view that budget this time around probably will not be that much to look forward to. We have been maintaining that budget, if you look at the size, is just 28 lakh crores almost, and our economy is around almost 200 lakh crores. And if you look at most of the major announcement that happens is outside budget. And also, if you look at state spending, it is 1.9x of the central spending. So I feel budget probably from a slightly from a directional perspective, but it won't be a game changer in the sense that government does not have any headroom to spend enough, because the tax revenue growth hasn't been that great. So I feel we are not in that bargain where we see that there will be a big bang announcement which can lift economic growth to a broader recovery.
So do you think fiscal prudence will take precedence once again, which we've seen from the BJP government in the past?
It should. Ideally, it should. But looking at the scenario right now, there could be some announcement which might influence foreign capital into the economy. But in terms of fiscal prudence, I think market is largely expecting around 3.6% fiscal deficit. It can be slightly higher. But in the sense that we have to look at what the credit rating agencies are going to look at. So if you are looking at central going to 3.8, even stress, there is stress in even the state spending as well, and plus the off-balance sheet borrowings that they do. So net, I don't think there is any bigger headroom to look at. So I don't think government also has an incentive, because if you look at the election, it's already done. We don't have any pressure on the government to go for big bang, kind of a consumption stimulus or something. So I don't think that will be the case. So fiscal prudence probably will be maintained. I don't see government going overboard, because obviously we have to be cautious about what the credit rating agencies would look at.
Okay, so let's assume the budget is not a game changer. Let's assume the earnings season shapes up as per estimates. Thus far, it doesn't look all that bad. How certain, or what's the probability of this broad-based recovery that you cited in your report, Jitendra? Is it a strong conviction-based gut, and therefore are you placing your clients' money into those buckets, or is it a wait and watch approach that maybe these guys will come back and bounce back in 2020?
So let me be clear. So right now we think that broad-based recovery will take time. So we think that it might take a couple of more quarters to confirm this, the slightest improvement that we have seen. Like PMI numbers have bounced back. If you look at the electricity production has, so there are certain data points which points towards some kind of recovery over the past couple of months. Obviously, the monsoon was a little bit good. I mean, look at 10% above normal, which is the highest rainfall that we received over the past 25 years. So we are expecting the rural growth might get some kind of benefit in the Rabi crop season, which is another 1 or 2 months. So there are certain offshoots, green shoots that are visible. But to call it a broad-based recovery, I would look at the credit growth. So if you want to, let's say, grow at around 12% on a nominal terms, your credit growth should be somewhere around 15%. But looking at from April to Jan, the credit growth was just like 7.6% versus 15% previous year. Obviously, if you look at the NPA cycle, right? So earlier it was large corporates, mid corporates, and if you look at the recent announcement by the corporates. So we are seeing some stress in the retail side as well. There was some marginal uptick in gross NPAs in the retail space, credit card, unsecured loans. So in this kind of scenario, I don't think we will see a broad-based and significant recovery. But I'm not very pessimist as well. So we are very much data dependent. As I mentioned, some of the offshoots, green shoots are visible, and plus the global growth. So we are slightly more positive on the global growth front. We think that the PMI numbers globally has bottomed out, and that could have some rub-off impact on India as well.
But all of these factors would largely impact the larger pockets as well. So how is you, or how would you, when a client is putting in money to work, how are you distributing this? On the basis of this, you could make an equal call on the large caps vis-a-vis an equal call on the broader end of the spectrum. Yeah. So what will give you the conviction that let's put a larger allocation to the non-Nifty or non-top 100 names?
Yeah, so good question. So what we do, we have a model portfolio. So definitely the quality, when the growth is slowing down, definitely quality makes a lot of difference, and we are overweight on quality for sure. But at the same time, there are certain pockets of growth which might be captured via mid caps. For example, your movie exhibition industry or multiplexes. There we are very bullish. We think that they are adding screens in these depressed times. They are adding almost 180, 90 screens a year. So that industry is doing well. Some of the chemicals companies that I have been very vocal of and doing extremely well for us. As I mentioned, there could be some signs that the Rabi crop season could be good, so the farmers' income could be slightly better. So some of the NBFCs which are focused on rural areas, those mid-cap NBFCs we are buying. So we are not going outright and saying that this could be a time to get into mid-caps for sure, but at least there are certain pockets where we are positive on as a structural story. So we would like to go for it. But within the large caps as well, we are actually avoiding certain space. So we might be very much positive on, let's say, retail the private banks, larger private banks. But the second tier, third tier banks, we are avoiding it as of now. So I think it's a very mixed kind of outlook, and you have to be very much careful about what stocks you are picking as of now within the sector as well.
I'm just going to take that point forward that you mentioned in your previous answer, that credit growth in rural market has to see a recovery. I don't know how good a gauge this is, but Bajaj Finance retail rural lending on year-on-year basis is up 49%. And I don't know how good a gauge that is, but are you seeing any sort of green shoots for rural economy to see a recovery? Because in the last 2 or 3 quarters, the numbers, even from the FMCG space, the rural market has been lagging, which was not the case, by the way, if you look at 8 or 10 quarters back.
Right,
And of course, we'll get a better gauge in terms of FMCG companies now. They'll be reporting their numbers this particular week. But overall, if that's the whole theme, even for the broader markets, would you also look at auto as a pack then, which is largely underperformed last 1 year? There's no demand. One side of the market would also say BS6 implementation comes, vehicles will become even more expensive. But will the demand revive with that, with the farmers' income going up? Would you look at that segment, or be it auto anchs as well?
Yeah, so there are two questions. So let me just answer that first. So in terms of rural growth, so overall rural growth may not be that great. See, Nielsen data says that last two quarters, probably they are growing much lower than the urban growth. Earlier they used to grow double the rate at which the urban demand used to grow. So I feel the overall rural slowdown is for real, and you have to bifurcate companies which are doing good within that pack. So some of the companies are gaining market share. Okay, so unorganized sectors are actually bleeding and they are not doing that great. So most of the organized players having great distribution network, they are actually gaining market share. So simply the stocks that you mentioned, some stocks are growing at 30-40% kind of growth in lending. That is because of their inherent ability to grow. They have invested in technology, that's why, and they are expanding their market share. But overall rural growth perspective, blanket, I think they are still struggling, and which is very much visible in the decelerating growth numbers. So we think slowdown is there and it will remain in the rural pack. Coming to auto, I feel obviously auto stocks have little bit bounced back. So as I mentioned last year as well, we were actually underperform on auto. We were not that positive, and we said that during Diwali time and because it's BS6 norms, there could be some restocking happen. After significant destocking which already happened, now probably we might see restocking happening ahead of the BS6 implementation as the OEM starts launching new vehicles compliant with the new norms. So there could be some bounce, obviously, and if you look at the two-wheeler segment, which is more linked to rural, we don't think that's going to be like a double-digit kind of a growth. In terms of passenger vehicles also, the guidance is somewhere around 5-6% kind of growth, and I don't think auto segment can go again back to double-digit growth in the next couple of years. I don't see that thing coming very sharply, a kind of a real bounce in auto sector as a whole. However, there are certain sectors which are linked to global auto names. We think that in Europe, probably there could be some bounce in manufacturing activities. We have seen PMIs have bottomed out and started improving from September onwards. There is certain headroom in terms of fiscal expansion in Europe. Last 10 years they have been actually contracting. This year there could be some possibility that they might expand a little bit. And that is a positive sign for the autos which are linked to European names. China as well has cut rates and they are also slightly expansion. So I think some of the auto names which are linked to global in this global supply chain, probably these are the stocks that one should look at, and we are positive on it.
Okay. Well, M&M Financial too, I think actually spoke about this piece on the rural side as well. Let's see if that works. Jitendra, my final question to you really would be, with the presumption that things turn out the way a few people are anticipating, where the discount between the large caps versus the mid caps shrinks a bit and maybe the broader end of the spectrum does make a bounce. Are you more convinced about the buckets in which you have been bullish on, specialty chemicals, for example, or some of the others? Or is there, for lack of a better word, a dark horse bet that you would look at, if not make right now?
Yeah, definitely these are the sectors that are in mind. What is a contra bet that you can take in this kind of scenario? So definitely, I feel if you look at BSE 500, construct, materials and industrials are also a large portion in terms of number of companies. Almost 160 plus companies are there in materials and industrials, right? So if the broad-based recovery happens, I feel that these sectors could bounce back. Government has already announced their intention to look at infra as a whole. That was a out of budget announcement already. FM has mentioned. So I feel if this budget, and probably if we see that the finance minister and everyone talks about again spending heavy on infrastructure, probably I see that some of the beaten down infra names in the mid-cap space could see a good bounce. And these are the very high volatile kind of names where the order book, if it grows, it can trade at 15 times plus. In the bad times, they trade below 10 times. So straight 50% jump in valuation possible in this mid-cap infra names if we see good pickup happens in terms of award activities and all. But the probability is low. But we are observing this space. We have added one stock or one or a couple of stocks in our model portfolio, which is a small or a mid-cap, kind of an infra name. But I'm not at all like extremely bullish that it can happen, but these are possibilities that it can bounce back. Secondly, some retail or probably banks which are mid-sized banks which have been beaten down very badly in this default scenario. So if economy recovers and we see more recovery happening, probably some of the beaten down small banks can recover faster. Not PSUs, but private sector banks. Yeah.
Okay. Any dark horse, according to you, in terms of specific sector this year that that can perform well, which has not been doing well?
Yeah. So as I mentioned, the infra could bounce back in H2. I feel the industrial segment, and probably if government is focused on, already they are focusing on infra, but because they don't have enough money, the sectors have beaten down badly. But I feel that if the focus comes back to infrastructure, probably some of the beaten down interest names could pick up. So these are the sectors that could look at. And I think some interesting story might come up in cement. A lot of people are not that positive on cement demand, but the pricing growth has been very strong and the cost is falling. The petcoke prices have fallen. So I feel some of the cement stocks could be a good pick in these times.
Again, all tied into infrastructure. Let's see how it goes. But Jitendra, so good of you to join us today. Thanks much for taking the time out and being with us.
Thank you, Neeraj. Thank you.
Thank you.
Well, that's the view from Credit Suisse Wealth Management. Jitendra Gohil talking about their expectations from the year 2020, not just the budget. The budget may not necessarily become something that will be a game changer necessarily. By the way, as we speak, the markets are still steady, and let's get in Shefali Malik with more updates and some details, granular details on earnings as well. And Shefali, we've seen the prima facie numbers of Bajaj Finance. Now the release is out. They've given some more details. What's standing out?
Well, some of the other details that I picked up, the slippages figure was higher at 936 crores versus 786 crores on a sequential basis, and it's the absolute number is much higher than what they have reported in last couple of quarters. And about the cost of funds, they're saying that it has come down meaningfully by 9 basis points to 8.29%. AUM growth was granular across most categories, and apart from that, they're also saying that they've made accelerated provision of 85 crores in one of the loan against securities account, referring to the Carvia account here. And on the residual outstanding of this account, they're saying that based on the progress in Q4, they will take a final call on provision. So basically, they've not taken complete provisioning on the same, and just 85 crores as of now. So slippages are much higher, accelerated provisioning, but despite that, they've reported very strong earnings. Some commentary also coming in that there was a slowdown across most consumption categories, which got reflected in Q3. And however, there is some uptick in the consumption categories since December, which has continued in Jan so far. And even the Republic Day sale momentum was also very strong. However, before giving a definitive view on the demand environment, they would like to wait and watch a bit more. And the AUM growth, according to them, it was granular across most of the categories. There were write-offs as well, which were higher. So write-off which came into the tune of 380 crores versus 185 on a sequential basis. And the total write-offs and recoveries were also higher at 695 crores versus 667, which resulted in the flat gross NPAs. And apart from that, on asset quality, they are saying that they continue to remain in cautious mode in some of the categories such as auto finance, unsecured personal loan, and business loan businesses, basically.
Okay, Shefali, thanks a lot for joining and breaking down those numbers for us. Big number of the day, surprising the street. And you've seen the stock reaction. It's up nearly 4% in trade, inching very closer to that mark of 4,400. Good show coming up in a weak economic environment, which I believe everybody was scared whether slippages, or be it in terms of asset quality, especially with regard to Bajaj Finance, would deteriorate. But that's not happened, so to say. But talking about the numbers, it was a steady quarter actually for Teamlease services. Operating margins, however, remained under pressure for the overall business as well as for the general staffing business. Let's discuss the quarter gone by with Mr. Ravi Vishwanathan, who's the CFO of the company. Mr. Vishwanathan, hi, good afternoon, and thanks a lot for joining us. The revenue growth that you've posted of about 15%, you think it could have been better? And give us a sense with regard to margins. We've not seen much of expansion, what most of the analysts were factoring in this time around.
Yes. Margins have been under pressure. I mean, due to the fact that the growth in the general staffing business did not happen. There has been slowdown, I mean, the slowness in the economy. We thought we were a little immune to it in the first 2 quarters, but no. It did get to us in Q3. Some of the large deals that we were pursuing got shifted to Q4. The good news is that most of the other businesses seem to be coming back on track for us. So as we come into Q4 and get into the first quarter of next year, we seem to be in a better position than what we were same time last year, given that all the other businesses, whether it's specialized staffing, other HR services, the associate companies, all of them are on the positive track. General staffing also should come back on track soon because we have done all the right things. And as a company, we feel pretty confident as we get into Q4 and prepare ourselves for Q1 and for the next year.
Okay. Sir, you spoke about general staffing and the other business as well, where the realization, talking about the general staffing, which has seen some bit of improvement to about 751 versus 739, which was there in the September quarter. Do you expect these realizations to even move higher in the coming quarters?
See, this realization for us, which is what we call the per associate per month, kind of grows by about 5 to 6% annually. I mean, that's the number that actually, historically, that's what it has grown by. While we are making efforts to come up with newer products which will take it significantly higher, those have not hit the market yet. So currently, we can expect a 5 to 6% growth in these numbers at a minimum every year.
What about the specialized staffing, which gives you a better margin in terms of revenues from that segment, sir? Is it still just about 10 to 15% of the total revenues? Do you expect that contribution to move higher, which can even improve your blended margins going ahead?
Absolutely. You hit the nail on the head. The specialized staffing business, we are targeting a growth of anywhere between 18 to 25% next year with a lot of costs that have been rationalized at the back end. So we should be able to get to better growth than what we have seen in the current year. We brought new leadership on board, costs have been rationalized, teams have been restructured. So like I said, all these are making us feel that we are on the right track as we get into Q4 and Q1 of next year.
Okay. In terms of, breakup with regard to government revenues right now, what does it stand at? And in terms of receivable pictures also from that segment, has it been on track, sir?
We have been able to collect a fair amount of receivables on the government side. I wouldn't say it's completely on track, but we have been able to collect. One thing that we have consciously made a decision to slow down or exit the government business over a period of time, and that exit will probably happen only in about a year and a half or 2 years from now. So, which means that you will see a reduction in the government revenues over the next many quarters, actually, as we exit the business totally. But having said that, I must say that the receivable position is much better, which is giving us hope that we will not be required to make huge provisions like what we did in Q1 of this year.
Fair enough, sir. So you're suggesting the aim is to completely reduce exposure from the government side, and also if you could help us, what's the outstanding receivables as of now in terms of number?
The outstanding receivables would be in the region of about 20 plus, about 20 to maybe between 20 to about 25 crores right now, which will come to us over the next 1 year.
Okay. And in terms of various sectors, I think there's been concern about telecom as well. Have you witnessed any sort of slowdown? What sort of exposure do you have to that sector?
Telecom exposure should be, the telecom staffing business is again back on track. Like I said, our exposure is pretty limited, but we again work only with the OEMs and not with the service providers. So that's actually okay for us. Having said that, we have paired our exposure towards certain low margin deals that the telecom staffing business had taken up over the last 18 months. We have exited most of those businesses, And today, I think, like I said, we are in the process of signing up some better deals on the telecom staffing side, and which is giving us hope that that sector is not all out, but there's still a lot of hope as far as that sector is concerned.
Okay, so one more quarter to go for this financial year. Hoping that this quarter so far has been better for you guys. But what sort of targets, any internal targets that you guys have for FY21? How the new financial year can be different from the current one?
See, we've always said that we're going to be a consistently warm company, targeting a minimum of between 20 and 25% top line growth, and maybe a 30 to 35% bottom line growth, which is what it has been so far. You can expect something on similar lines for next year.
And in terms of margin, do we see that expanding with more revenues coming from specialized
100%,
staffing?
100%, without any doubt. Without a doubt, the margins will be expanding as we get into next year.
You give us a range, sir. What territory could that be?
I'm sorry, we don't give guidance, so I'm afraid I will not be able to answer that.
No worries. Just one last question. Any more acquisitions then you guys are looking at? I think recently you had done one or two.
We did one recently, but there's nothing on the table right now.
Okay, Mr. Vishwanath, I appreciate you joining us, and all the best to you for quarters to come. That's the management of Teamlease indicating that they do expect margin expansion to come by in the next financial year, and that will be owing to more contribution coming from the specialized business, which gives better margin there. But for the time being, the stock is, however, down about 2.5% because the numbers did not meet what various analysts were factoring in this time around. If we just pull up the last 3-month or 6-month chart for Teamlease, we'll give you a better picture as to how the stock's been performing over a period of time. So even in the last 6 months, no major returns coming by. In fact, it's down about nearly 5% in trade, Neeraj.
Yeah, revenue growth misses are not viewed as positively, though I must say some margin expansion stories like JK Lakshmi and a few others have gotten rewarded. But the last one out of the wheel for the penultimate day to the FN expiry, and 2 days before the union budget. Manav Chopra of Indiabulls Ventures with us on the show with his thoughts, and Brijesh Bhatia of Dealmoney Securities also joining in. Gentlemen, really good to have both of you, especially in a day like this. Good afternoon. Manav, let's start off with you. It's been a robust day, though the slightly contrasting move today is that the large caps have done well while the broader markets have stayed quiet.
That's true. In fact, the markets had witnessed a breakdown yesterday on the daily charts, and post that, we haven't seen any sell-off today. There was a sell-off which took place on the intraday basis just an hour back, but which has been bought into. So I sense overall, at least going towards the budget, the Nifty index will continue to hold its ground of 12,000, 12,050 levels, which would be a very strong base for a near-term perspective. And for the Bank Nifty, the important support for the Bank Nifty stands at 30,600. So as long as these support levels hold prior to the budget or during the day of budget on the closing basis, I think it definitely indicates a very strong support for the bulls. For the near-term perspective, I think we could see some sort of a choppy momentum with positive bias. I think that is my near-term stance. But going forward, I think there is a lot of activity, Neeraj, that is happening on the mid-cap and the small-cap space. And I still see a very good momentum rally coming from the pharmas and the chemicals. And that trend is still likely to see more extended up legs, at least in the near-term perspective.
Okay. Brijesh, is your view any different? Because today is slightly different. I would have thought in the morning that if the global markets are doing okay, maybe the Nifty might be up 0.5% and the mid caps and the small caps will be up a percent. It's kind of contrarian to that view.
Yeah, good afternoon, Neeraj. I think, after a long time, large caps are moving up. And if you look at the momentum, it's purely the short covering moment stocks which have beaten down. It's in the guards of HDFC and L&T or Reliance. So I think, I think large cap could again take a turn. And I think Nifty has somewhere already found the bottom at around 12,000 levels, I think. And if you look at the short-term charts, it's been trading in the rising channel, taken the exact support over there. And even if you look at the 50 days average, generally Nifty in last 6 months have respected those average, have gone nearly 0.4, 0.5% below that average, and again resumed upward journey. And in the similar scenario, we have seen the similar moves coming. Yesterday Nifty has gone around 30-40 points down from the 50 days average, and again back to the positive momentum now. So I think Nifty would again outperform now, and I think I'm expecting Feb probably by the 10th of Feb, Nifty might again hit a new high also. So I think I would go long on Feb series of Nifty at around 12,190, 180, keeping a stop loss of 12,076, which was yesterday's low, and look for around 12,360 on the upside.
Okay, that's the call coming in on the index. By February futures of Nifty around 12,190 with target price of 12,360. All right, let's then talk about individual stocks. There are a lot of stocks which are moving around. So Manav, what are you betting on this afternoon?
Yes, my first buy call is on Britannia from the large caps. In fact, this is one stock I sense at least before the budget. The kind of a momentum the stock has already witnessed from its recent lows. There has been already a good rally of 4 to 5%. The short-term bottom is in place, and the overall trend for the stock continues to be bullish. In fact, we have seen the stock also exceed its previous week's swing high, which is definitely indicating a good positive bias and confirming the uptrend for Britannia. We recommend a buy into this with a stop loss of 3150 for an upside target of 3400. My second buy call is on Biocon. From the pharma space, this stock has been forming a sideways trading band since past couple of weeks, and it has seen a good breakout today on the daily charts, accompanied by above average volumes. Also, there has been a good significant amount of open interest addition, which confirms that the fresh long positions has been built up. There is a very strong support at the levels of 290 on the lower side, which is also our stop loss. Recommend a buy with a stop loss of 290, and we expect a short-term upside target of 325.
Okay, so those are calls coming in from Manav's side. Brijesh, what about you? You too have to buy calls in terms of individual stocks?
Yeah. First one is the Reliance. So if you look at the Reliance, we have seen around from 600 back to around 1470, 1465 levels. And there is a bullish harmonic formation right at the rising trend line. And even if you look at the average, it has been coinciding with the short-term moving average. So I think I would take a long bet at around 1475, 1480, keeping a target of around 1555 on the upside, and stop loss can be placed at around 1445, slightly lower the recent low. Second bet is on KEC International. So stock has given a strong up move, and if you look at the volumes in last one couple of weeks, it is very much higher, and it has surpassed around 6 months average volume. Plus, if you look at the momentum, it has given a breakout of around pennant, bullish pennant. So I think at around 344, it stands out to be a good bet for a momentum targets of around 375 on the upside, and stop loss can be placed at around 333 on the downside.
Okay. Well, watch out for those. Paras, let's get in a fundamental voice on the show as well. Paras Adenwala of Capital Portfolio Advisors joining us on the show. Paras, it's been a while. Good having you. Thanks much for joining in. Neeraj here. Good afternoon. I want to start off, Paras, with what have you made of earnings thus far? And if we can, dissect this piecemeal. I was looking at the private financials. Bajaj Finance is a case in point today, but HDFC, Kotak, Axis, etc. doesn't seem to be too off from the mark.
Yeah, hi Neeraj. Yeah, quite tend to agree with your observation. I think the numbers generally have been in line, or in some cases, I found the numbers to be better than what I'd really expected. So, I wouldn't be too negative about the Q3 numbers. I think Q3 numbers have generally been okay, and I certainly see very, very initial signs of things kind of bottoming out.
What results, Paras, led you to that assumption? I mean, I can understand financials is more of a continuation of the same. So what gives you this belief that with results or otherwise that things are indeed bottoming out, and where therefore do you believe the earnings trajectory would be the sharpest over the course of the next 12 to 24 months?
I think for any business, we need finance, and if you really want to know what's really happening in the economy, you talk to NBFCs, you talk to banks, and you start realizing what is the kind of credit offtake that is likely to happen in future. So some of the leading NBFCs that have already come out with numbers, for example, Mahindra and Mahindra Financial or L&T Financial, I think they have given a commentary which is not too negative. For example, M&M Financial is quite positive about reused vehicles, They are also positive about the tractor segment. L&T Finance is also positive about on the retail side. Even on the corporate side, I think they are turning reasonably positive gradually. They are not saying that we are going to be seeing an offtake in credit immediately, but at least the decline probably would be stemmed. You talk to banks, again the banks aren't too negative about the next 3 to 4 quarters. Maybe the fourth quarter may not be as good. The bottoming out may continue. But 2021, the second half, my sense is things should be better than what most people expect.
Since you've been looking at all these numbers pretty closely, Paras, we just got Bajaj Finance's numbers too. Of course, it's the most expensive NBFC right now. But looking at the numbers closely and the sort of performance that they've been posting quarter after quarter, amidst economic slowdown, we've seen other companies' earnings deteriorating. But this one, being the torchbearer of the industry, has managed to weather the storm pretty well. At the valuation now it currently trades at, do you think it's justified owing to the performance, and it can still be a good bet going ahead as well?
I think it's a very, very strong company, and if there is one company which has capitalized completely on the problems on the NBFCs by way of consolidation, I think it is Bajaj Finance. I think this company thrives both on innovation as well as the scale. So I think that story should continue. But would I be a buyer at the current levels? Probably I would be a buyer on a correction. But am I expecting a further re-rating in the stock? The answer is no. I think what one can expect is earnings growth and not a further re-rating in the PE. So, but having said that, if the company continues, the earnings continue to grow at about 30-35% every year for the next 3 to 4 years, I think that is good enough for me to get capital appreciation. So yes, on a correction, I would definitely be a buyer in Bajaj Finance.
Okay. The moment, I guess, the stock's trading at its life high levels, strong gains coming in post the earnings. You've got Tata Motors among the nifty constituents that's sitting with a good amount of gains today. We were seeing some bit of losses coming by in the last 3 or 4 quarters. Paras, overall, the auto pack, be it Tata Motors, most of these companies have been underperforming, and we know the reason why. Of course, Tata Motors could have its own issues as well, owing to JLR operations too. But what's the view in the auto space?
There again, I think the manner in which most of the automobile manufacturers are changing the product mix, I think that's quite commendable. They had inventories of BS4 vehicles for a long time. They scaled down the production and ensured that the inventories are all cleaned up. So by March, my sense is you should see bulk of the cleanup happening, and the sale of BS6 vehicles, the initial sale has already started, and I think it should start catching momentum, in the next year. My sense is the numbers for 2021 should be better than 1920, and I think you will see further momentum catching up in the following year. So in terms of pecking order, clearly passenger vehicles is somewhere I would definitely look at. I would not wish away the CV segment. I would look at CVs as well, but because I do expect infrastructure to pick up. Tractors are also looking interesting because I think the decline has already been stemmed, and two-wheelers, yes, it is slightly slower, but a good monsoon should definitely aid the growth in two-wheelers as well over a period of time. So on the whole, I'm not too negative on auto, but would I be a buyer right now? I would wait for some more time before plunging into it.
Okay, we'll, by the way, we also want some technical opinion, but there are 2 or 3 results that we need to watch out for. Firstly, Birla Corp came out with numbers, and I think extremely strong set of numbers on the quarter 3 basis. Revenues up 10%, net profit up 3 times at 81 crores. Look at that sharp spike in that counter. Margins at 17.2 versus 13.3, so pretty strong set of numbers given by Birla Corp. And I think earlier, not as optimistic, but we had numbers from Ramco Cements as well, so it's been an active day for cement. As I understand, and the Bloomberg terminal is at least throwing some of the other numbers as well, the likes of Jubilant Foodworks, etc. We'll try and read about them as well. Ramco's reacted duly. Birla Corp is reacting duly. Jubilant Foodworks, I'm just waiting for the numbers to be flashed on your screen, but I think the standalone EBITDA margins have come in slightly lower than what we were working with. These are the numbers of Jubilant Foodworks. Escorts too has come out with numbers and beaten estimates. So a slew of numbers. NIT Tech is the other one that has come out with numbers. So 3 or 4 names that have come out with numbers, and we'll try and analyze some of these both fundamentally and technically. Paras, firstly, mid-cap cement or cement at large, but mid-cap cement, while they've been chalk and cheese, there are some outliers which have come out with a very robust performance. Have you had a chance to look at any of these quarterly numbers? I read out Birla Corp, but that has just come out right now. You have not had a chance to look at that, but any other that you may have looked at which you found interesting?
I think Ultratech came out with decent numbers. I'm quite positive, and so is the commentary. I think if there is one large cap play, that one should definitely invest into for the longer term, it is Ultratech. And the outlook again has been reasonably positive. Ramco Cement, I was slightly disappointed. I think the numbers were lower than my expectations. But nevertheless, I think with the kind of uptick that we are seeing in the industry, I would definitely look at some of these players. So Birla Corp, again, while I have not looked at the numbers, but I think there are some positive changes happening within the company. And whatever suppression that we had seen in terms of the margins in the earlier years, I think there is some course correction out there, and due to which we should definitely see some kind of an uptick. With prices forming up in North and the Central India, I think all those players located in these places, we should see some very good margins happening. So on the whole, I'm quite positive on cement.
Yeah, and I think Ramco today disappointed with the numbers, though they didn't look that great. But we were talking about Jubilant FoodWorks. Let's just pull up the stock. Ramco, by the way, is down 5%. It was an underperformer in the recent past. The numbers have not looked good. Look at Jubilant. I think we need to wait by for the SSG number because that's a key metric to be watched. But looking at the release, the total income has come in at 1087, and our expectation, at least the Bloomberg expectation, was 1046. So no disappointment there as well. In terms of profits, that's at 137 crore. Versus our expectation of about 115. I'm reading out the consolidated figures here. The same store sales growth, the analysts were expecting that, I guess, to be in that range of about 6 to 7%. Let's see how that pans out. In fact, if you look at the SSG growth in the previous quarter, it was 4.9%, I believe. And the last time also, we did see some bit of sequential improvement. And after looking at SSG growth of Westlife Development, I think Street would be hoping for a better number from Jubilant FoodWorks. And that's what the trend has been, at least in the last 2 quarters. The stocks, by the way, recovering from the lower levels. We'll have to see if there are any one-offs in the numbers. But let me just quick... Yeah, go ahead, Neeraj.
Navneet, and that seems to be Escorts, which has also come out with good numbers. The net profit is above estimates. Revenues are above estimates as well marginally, and I think the margin performance has not been too bad. 13% margins, which is, I think, pretty good numbers for Escorts as well, and which is why I think you're seeing that spike on Escorts too. So 2 key numbers that have come out, one Jubilant and other is Escorts. Now, I agree that for Jubilant FoodWorks, we need to also wait for the monitor for the same store sales growth numbers because that will be a needle mover. But Escorts, Paras, what do you make of these numbers? Profits up 11%. Revenues are flattish, but I think above what the polls were, and the margin performance has looked pretty robust.
I think this is one company which has really turned the corner very well, and while this happened a few years ago, but even on a downturn, the manner in which they have managed the downturn, I think is quite commendable. And if you look at the commentaries, again, the commentaries haven't been too negative, even during the worst of the downfall. So I think this is a company to watch out as we see things improving gradually. Good monsoon, better spending power of the rural folks in the next few quarters. We should see companies like Escorts doing better. And infrastructure, if it does really pick up, I think that's going to be the icing on the cake. So I'm quite positive on Escorts. I think at the current valuation, it definitely looks attractive.
Okay, a lot of numbers coming by, and especially for Escorts. Remember, we've been highlighting how the stock's been outperforming this month itself. It's given you returns of 18 to 19%. So going into the numbers also, it was pretty strong, and of course, reacting positively once the numbers have also come out. Good going for Escorts. NIT Tech revenues are up 16%. You've got the profits also surging about 34%. I'm just reading the press release. These numbers are being compared on year-on-year basis. The order intake during the quarter increases to about $218 million US. Remember, this one too has been an outperformer since the time time they announced their buyback at 17.25. So let's quickly get a technical check going on all these companies which have just come out with the numbers. Manav, NIT Tech, Escorts, both have been outperformers of recent past. Would you take a bet on any of these stocks?
See, looking at the chart of Escorts, it clearly indicates that the prices are still in a very strong uptrend and the momentum. In fact, we've seen any short-term correction towards the short-term moving averages, it's often bought into, and a very strong rally has already been seen into the stock. So even though the prices are in the overbought conditions, I sense this trend is likely to continue as long as the Escort holds the important support of 720 levels. Looking at the chart for NIT Tech, yes, we have already seen a good rally, and I sense it's a good time to at least book partial profits in NIT. There has been some select exhaustion patterns on the momentum charts, which indicates some sort of a profit booking coming into this. The support for NIT Tech on the lower side would be at 1940. So once if it breaks that, you could see extension of the profit booking. But at the current levels, I think the risk reward ratio doesn't favorable for going longs in NIT, but still one can still go long in Escorts at the current zone.
Very strong margin performance for this one. We are awaiting Jubilant. I think it's difficult or not the most prudent thing to trade Jubilant, to keep in mind, because we are waiting that SSG number. But you know what, we haven't taken a chart check on arguably the stock of the day, which is Bajaj Finance at 4394. So that's the other important one that you have to monitor. Brijesh, not too many people would have maybe necessarily gone long here, but for somebody who went long, would you take some chips off the table, or is the chart looking very strong for more gains? Bajaj Finance.
I think I would still continue to hold this stock. I think it's not a time to book the profit. I think the fresh momentum has just started for this stock. And I think this stock momentum can go way back to around 50-200. If you remember a couple of weeks back, we have talked about this in the morning show also. I think this stock is one of the best performing. And if you look at the structure also, it's still a stronger structure. I think till it is not breaking, if in case one is riding the stock, keep a stop loss of around 41.40 and continue to ride it. I think 50-200 can be on cards probably in a couple of quarters.
Okay, that's Bajaj Finance for you. Brijesh, a quick view also on Ramco Cement, which is corrected post the numbers, but this one too in the last 1 or 3 months, I think the stock was doing pretty well.
Ramco, I think I'm very much bullish on the Ramco, even though its today momentum is slightly on the negative side. But if you look at the monthly chart of its Ramco Cement, it was strongly unable to cross around 850, 840 mark. And if you look at the monthly time cycle also, it has nearly crossed about after the 821 months. So if you look at the time cycle wise, the price breakout, it stands out to be very, very stronger. I think I would continue to hold long on the Ramco Cement. Probably this move can track towards 784. I think that at that point of time, we take a long bet, keeping a strict stop loss of around 720 and look for back to around 950,000 on the higher side.
Okay. Paras, how much credence do you give to this reports of decontrol, deregulation of urea, and because it's such an important step, so on and so forth, and therefore what happens to the business prospects of some of these companies?
I'm not too sure, Neeraj, that all this is going to be deregulated and decontrolled completely. If there is some announcement, you will certainly have some kind of a control through the back door. If you notice what's happening in OMCs, again, while on the face of it looks everything is kind of decontrolled, but it is not. Something similar will happen in this segment as well. So I'm not particularly a fan of fertilizer stocks.
Yeah, that makes a lot of people who aren't. I'm looking at companies which are doing well and trading at 52-week highs for themselves. And there is Coromandel out there, which is there, by the way. But my final question to you, at least, Paras, and that's on how almost every day we have one chemical company or specialty chemical company which hits these highs. Today it's Fine Organics, which is up 5% at 24.20. And an IPO which came at maybe 600, 700 or 800, and it's quickly ramped up to 2400. But even otherwise, Navin Fluorine went up after results, SRF trading close to highs, Deepak Nitrite close to highs, Vinati Organics highs, RT Industries has recovered so well. Do you like this pocket even now after the run-up? I mean, I don't know if you've liked it in the past, but what's your view currently?
Neeraj, I'm a big fan of most of the companies that you mentioned, and in our model portfolios, we are kind of adequately weighted on the specialty chemical space. I think we are in a very good spot right now, looking at whatever is happening in China. Most of these guys, they are doing very well. And the good part is that they have carved out a niche for themselves. Look at Vinati; they have a special, special molecules which they are kind of largest in the world. Aarti is also focusing on a few products. Ditto for fine organics. So all of these guys, they have market leadership in the sub-segments that they are operating in. And all of these segments do have a very good demand. So I think if you have to talk about a secular story for the next 2 to 3 years where you will keep on seeing growth of 15 to 20%, I think these are the companies. And the best part is that most of these companies have a very clean balance sheet and a reasonable corporate governance track record. So despite the run-up, I continue to be very positive on this space.
Okay. We'll leave it at that. Thanks much for taking the time out and being with us, Paras. Appreciate you joining in. Look forward to having more often.
Thank you.
That's a view from Paras Adenwala. And by the way, the markets have come off. Just before we get into Andrew Freris is our special guest to talk about what could be anticipated from the Fed. But just want to mark what the Indian markets are doing. It just come off a little bit from the highs of the day. So you've got to keep that at the back of your mind. Both the Nifty 50 as well as the banking index have come off from the levels that they were trading at. So you've got to be mindful of that. I'm just trying to see what's led to this pullback. I think Grasim has pulled back a little bit. HDFC has pulled back a little bit. There is weakness, some weakness from the highs of in stocks like Gohil, etc. So these are these 3 or 4 names that are just cooling off from the levels that they were trading for themselves. Ultratech Cement too, incidentally, is down about 1% right now. But the US Federal Reserve will be announcing the policy decision later tonight. Majority of the expectations are that of Jerome Powell keeping rates unchanged. Is there scope for him to do something different, if not in action, then in commentary? And what will the implications of such a move be? Andrew Freris, CEO of Ecognosis Advisory, joins us right now on the phone line. Andrew, good having you. Thanks so much for speaking to us at BloombergQuint. What's your thoughts, Andrew? Any surprises possible?
I don't think so. Not just because the markets are expecting that. It's because the macroeconomics of the United States, and let's face it, this is what the Fed is basing its decisions, do not really point either for a cut, most definitely not for an increase. So I think they are going to keep it where it is. And the Fed is well known of not taking politics into account. So to the extent that we are having the Trump indictment will mean absolutely nothing. The Fed has been a little bit cool, calm, and collected about the trade war. And the trade war appears to have entered, let's say, a flat period. So politically, economically, macroeconomically, and in terms of data, there is nothing there for the Fed to say we have to cut or we have to increase. So I'm afraid it's very, very boring. Expect no change in interest rates policy.
Yeah, Andrew, I mean, they've spoken about this material reassessment so many times now. Anything that you expect in terms of the commentary which could stand out, or more of what we've heard at least in the last 2 policies?
Well, there are a number of things, actually, that the Fed could keep at the back of its mind. We had a huge hiccup in September when 3 months, actually not just 3 months, in general, interbank interest rates really shot up because of a specific hiccup. But the fact that we're in a period of low interest rates does not mean that the markets cannot simply find themselves grinding upwards. We're going to have the Bank of England on Thursday. This is not going to influence the Fed, but there is expectation for possibly a cut. So at least one major economy is looking to lower interest rates rather than increase interest rates. Again, the Fed will not pay any attention to that specifically, but against as a background. Now, is there anything that could surprise us? I'm afraid not. There is nothing. The American economy is genuinely and very slowly slowing down. We had, for example, the quarterly GDP growth rates in the last 3 ones, were all pointing down from 3.1% to 2% to 2.1%. And the expectations for the 4th quarter, these are all quarter on quarter, is 2%. So slow down. And even more worryingly, all the Institute of Supply Managers, ISM indexes, the manufacturing indexes, since August has been below 50. And that always calls, I won't call it a recession, but it's calling for a slowdown. Inflation is hovering at the 2% level, but the Fed has now stopped bothering too much with inflation because that's not a real issue. So if I look at the numbers, they don't look particularly well, so that would argue against an increase.
Andrew, you highlighted about the GDP numbers. I think that too will be coming out for the fourth quarter, December quarter this week itself. And 2% is the run rate I believe the street has been working with largely. But with fears of, trade war dissipating after US-China finally signed the phase 1 deal, do you expect recovery in the growth numbers then to come by this year?
Not really, actually, because it's very important to carry on emphasizing that net exports minus inputs, are a very, very unimportant driver in the GDP growth of both China and the United States. So the colossal emphasis that the markets have been giving into the trade war, I think they were misplaced, because it might have been politically, let's say, and even ideologically upsetting to see a world order of multilateral negotiations falling down now to unilateral or bilateral negotiations. But the impact on GDP growth was always in terms of a few basis points, not it's going to knock off 0.5% of GDP growth. That was never the case. Okay. So yes, it's very good, but I don't think it makes any significant difference to GDP.
Okay, Andrew, we leave it on that note. Appreciate you joining us today and taking us through your views, what one can expect from the FOMC. And largely, I guess, ahead of election, especially in US, we've not seen US Fed tinkering with the interest rates. But for the time being, shifting focus back to markets, as Neeraj already highlighted, we're off the high point of the day. Nifty is now at levels of 120. We're now around the 50 DMA once again. Crucial to see whether the closing comes about ahead of that or not. But before we thank Manav Chopra, let's get his closing strategies going. Manav, is there anything interesting popping on the charts? Is there any closing strategy that you want to share with our viewers?
Yes, so looking at the current chart, there has been slight weakness in the banking space. So Axis Bank is declining from its important support levels. It faced its important resistance at 745, and we have seen multiple, strong selling pressure coming at those zones. Since the prices have also breached its intraday support, I believe this stock could be a good STBT strategy. One can maintain a stop loss at 742 on the upside and expect lower targets of 700.
Okay, Manav, we'll leave it at that. Thanks much for taking the time out and giving us your thoughts. Appreciate your time. By the way, before we get to Fab 4 stocks of the day, I want to pull up Jubilant FoodWorks. The same-store sales growth numbers are out, and I think that number is 5.9. Let's just pull up the stock and see what that is doing. So 5.9 is a bit of a pullback after 2 quarters of staying sub 5, but just I want to see first how the market is reacting to these numbers. And I don't know if you have additional data, but can you get the stock up on your screen, the intraday? No big movement there.
But it's a good number, Neeraj.
Yes.
4.9 was last quarter, 4.1 was June quarter, and 5.9 is December quarter. So there's been sequential improvement in SSG number, and 7.2, what we were hearing, is the like-to-like sales growth number which they have posted, which means the existing stores which were there, like-to-like growth of those stores have been about 7.2%, which once again seems to be a good number. I think most of the analysts, what they've been highlighting for Jubilant FoodWorks going into next financial year now, the base for SSG will be lower. So the room for outperformance can be even bigger. But remember, going into the numbers, last 1 month, 2 month chart of Jubilant FoodWorks will tell you how the stock had already moved higher.
Yeah, I think that's Navneet needs the nail on the head, in my opinion, because the stock has run up in the anticipation of the numbers looking okay. And based on whatever little I read in the reports, this is essentially the band around which people anticipate the same-store sales growth numbers to be like. So this is not any kind of disappointment in Jubilant FoodWorks. The stock about 1% a quarter lower, but I think that's okay. Now, Brijesh, now that we have all the data out and no big negative surprises, would you trade a Jubilant FoodWorks in any fashion?
No, I think probably we might see a slight dip towards 1680, 1690, and then I would take a long bet, because generally stock has a tendency to rally and retrace around 38.2%, which is around 1678. I think that level might test it and it might resume the upward journey. So I would wait for a dip to go long, not at the current price of.
Okay, wait for more dips, and this could be largely profit booking that you're seeing after a good set of numbers coming from Jubilant FoodWorks. But let's shift focus and also tell you the Fab 4 stocks of the day. Let's go across to Sharad Dubey to find out what features in his list. Hi Sharad, good afternoon.
Good afternoon, Navneet. The first stock is Amber Enterprises. The stock is up more than 4% today. The stock did hit its lifetime highs today. The numbers are going to come out tomorrow itself, and the stock already has a run-up of almost 18% in the past 7 trading sessions. The street is expecting a moderation in revenue growth due to seasonality, but we can expect margin expansion due to fall in the copper prices. Up next is Narayan Hrudayalaya, which is up almost 4% after DSP Mutual Fund and SBI Mutual Fund acquired almost 4% stake. That's roughly 82 lakh shares at almost 340 rupees as stated in the Baldi portions, and the seller was the CDC group. They sold their 4% stake. Up next is Ercon International, which is up almost 6.8% and one of the top gainers in the Nifty 500 index, as the company stated in its press release that it will consider share split on February 11. And the last stock of the day is Mahindra and Mahindra Financial Services, which is up almost 4.6% on the back of strong operational earnings, where the disbursements grew almost 13% on a sequentially basis, and the margins also improved by almost 40 basis points due to lower cost of funds. Back to you.
Okay, Sharad, thanks a lot for joining us and taking us through those Fab 4 stocks of the day. Pull up Aptech as well. That stock's recovered. Remember, yesterday it was a week due to reports of insider trading probe, but the stock's now sitting at the highest point of the day. If I'm not mistaken, I guess the numbers were to come today as well. Watch out for that. Aarti Industries has been trading at its 52-week high level, so good going there. And of course, strength continues for Bajaj Finance. Biocon was one of the top technical calls from our experts as well. That's doing well. Even Marico has moved higher. So the FMCG pack, which will be in focus this week going to numbers, Marico was largely underperforming, I guess, in the recent past. That's sitting with gains of about nearly 2 or 3%.
No, Aarti is quite stunning, Ravi, in that, because when those reports of the company having those IT rates came about, the stock went down to 856 and 850, 855, 860 and stayed there for a while. I think in 3 days, the stock has gained.
Back to 52-week high levels.
Yeah, quite strong. And that the kind of momentum that is there in some of these specialty chemical stocks is pretty strong. Yogesh Mehta of Yield Maximisers is with us. Yogesh, a word on Aarti Industries and the kind of gains that this stock has shown. Just that brief interlude wherein, because of those IT rate news reports, the stock went down and back with a bang.
Yeah, Neeraj, good afternoon. That Aarti Industries post that news, I think we had that conversation, and about that I mentioned that this company is growing 15-17%, and the management track record is and the caliber is has been proved so far in the history. And I think the 15-17% growth rate plus into the specialty chemical businesses plus whatever capex they have done recently, that will also pay off in next 3 to 4 quarters. So I think it was a good opportunity, and still I think though the stock has run up by 10% today, but still it will be a good opportunity to get for investors at around, say, even if it corrects, even if it reacts any point in time in near future by further 10% from this level, it would be a good opportunity again. So definitely such kind of a company is very rare to find for the portfolio, and one should look at such companies when they are into a downtrend.
Okay, and that's a sharp recovery. Of course, now the chemical companies have been moving higher because of fundamental reason, and this one had corrected due to the rates, but nevertheless, it's recovered majority of its losses. Yogesh, a lot of numbers coming by in the last half an hour of trade. You had Escorts, good set of numbers. We've seen the stock not just today, but this month itself, it's done well. Jubilant FoodWorks posting strong SSG growth. NIT Tech also, I guess, decent set of numbers. Maybe profit booking kicking in for a couple of these stocks. Any of the numbers that you've been tracking today which stood out?
The stood out number which have come today, out of that only Bajaj Finance seems to be an outstanding number, as the NI have grown, the AUM at 1.45 lakh crores. But the only problem would be that from henceforth, though it is at a new lifetime high, but sustenance at this level would be a little bit of a question mark right now, not a bigger question mark, that the expectation by the investors and the market is growing day by day. So any kind of a disappointment, maybe near future or post 2-3 quarters, then we will the trader will be on the bear side would be more prominent. But I think till then one should ride But I think at 6.5, 7 times forward book value, 7.5 times forward book value, it remains expensive. But the growth rate of 40% and 40% on the PAT growth consistency for next 4 quarters remains a question mark for me in such kind of a scenario where only retail is growing and the consumer white goods segment is growing. And I think one more thing is that they've not mentioned anything about the Carvi issue, and there is no provision separated mention which I have read so far. If it has been mentioned, it is fine, but provision is a little higher, though NPA numbers are very much in control at around 0.7%. So in that context, the outstanding numbers are here. Rest all escorts and NID tag are just flattish, and as per expectation, there is no kind of a positive surprises expected, and positive surprise has not been delivered.
Okay, Bajaj Finance, of course, standing out in terms of earnings, and it's also crossed the mark of 4,400. We'll get you more details. Pull up the stock of GCPL, that's Code Rich Consumer. I guess the numbers will be flashed on the screen in a while, but what we're hearing is volume growth has been good. It's come in at 7%. I think the street was expecting the domestic volume growth to be in that range of about 6 to 6.5%. We were looking at a net profit figure of about 450 crore. Let's see what the number throws up, which was a growth of about 6%. But top line growth was largely expected to be muted, just 2 or 3% higher for that one. The numbers, I guess, being flashed. Yes, the profits have come in at 445 CR versus 450 crore, which we were expecting near it. So bang in line, I guess, at least in terms of bottom line. The stock's not doing too much, but I guess the volume growth number is looking pretty much decent. Yogesh, I don't know if you track GCPL that closely. The stocks, by the way, moved higher, maybe on back of strong volume growth, but is 7% good for Godrej Consumer? I think in the last 2 or 3 quarters, there was a quarter when they posted a volume growth of 1%.
Compared to that, the growth of 7% which has been flashed right now, I think that will be a positive surprise for in a consumer sector. And this company, which was in a hole for last 2-3 quarters, the volume growth was a concern. Now that remains, the clarity has come, and the profits and all are very much in line with expectation. There is not much far of deviation out of that. But I think at this level and the numbers which are showing in the growth, that shows some visibility for at least the next 2 quarters as well. And I feel based on that now, for this company, I think it was in a sidelines for a longer period of time and hovering at 680 to 700 level, now around 750 level odd. Maybe a upside would be there, and the discounting factor which was being given due to the lower volume growth, that may see some premiumization out of this.
Okay, I think we've got the top line number as well on consolidated basis. This is 2,800 crore, I guess, are the revenues which have come in, and we were looking bang in line, I guess, to 2,790 was the Bloomberg at least estimate which we were looking at. So top line, bottom line, both are in line, and it's the volume growth which is at the higher end, at least what the street was expecting, 6 to 6.5, but they posted domestic volume growth of about 7%. Of course, we'll break it down in terms of how India, Indonesia business, Africa business has done. Looking at the EBIT from India business is 442 crore versus 443, which was there in the corresponding quarter. There's an improvement in Indonesia. Remember, Indonesia was the one which was lagging in the last few quarters. So there it's 112 crore. That's the profit from that country versus 92. And even on sequential basis, I think the profitability has improved for Indonesia. Africa business, I think profits have come in at 60 crore versus 50. I'm just comparing it to the previous quarter. So there's some bit of improvement in terms of profitability on sequential basis, Neeraj.
Yeah, well, and I think the street would like any kind of positive surprises. Let's see if this indeed inches up further. It'll be really nice to get some commentary from the management in a bit as well about how do they anticipate these numbers to move up. And I'll be looking forward to some of the volume growth numbers, because last quarter too, I think some of these didn't look all that bad. By the way, as we speak, Tata Motors is up 7%. So you've got to keep that at the back of your mind. 188 and counting. Brijesh, while we speak about GCPL and some of the others, this big boy from the auto space really racking up the gains. It's about 190 now on fairly high volumes as well. What do the charts or the F&O positions indicate here, Brijesh?
I think I'll definitely look for a long bet on Tata Motors, because if you look at the move in October and I think mid of October to start of November, 175, 178 was a resistance it was at for quite some time. And now it has retested that support breakout level and moving higher. So you have to take a long bet, keeping a stop loss of yesterday's low, which was I guess around 175, and look for around 215 on the upside.
Well, okay, do watch out for that. And by the way, I was speaking about we were speaking about what's happening to some of the FMCG names. Look at Nestle. That's perked up, 15,896, up about 3% in trade and trading very close to 52-week highs, and it's trading at the highest point of the day as well. So there is that uptick. Even though the markets may have come off, there are individual stocks which are doing rather well for themselves. AI Engineering has had this sharp bout of an uptick. There is strength in Akzo Nobel, so Berger is not the only one which is doing well for itself. And of course, we've spoken about GCPL. That one continues to rise and shine, doing very well for itself too. Okay, it's time to take a look at what dealing rooms are recommending in the session today. Darshan is here with his channel checks. Darshan, good afternoon. What are you hearing?
Yeah, so obviously Bajaj Finance and Bajaj Finserv are the two stocks that have been spoken about. Bajaj came out with the numbers. Even if you go through the commentary, the presentation did indicate very, very strong commentary. Now the management conference call is there at 5 o'clock. So the street does anticipate more strong commentary to come in. They want more details. I think the only grey area is what happened to Karvi, because there is not much clarity that's given on the presentation. But nevertheless, the management con call will be important, and if what's written on the investor presentation and much more clarity comes in there, there could be more potential upside, is something that dealers are talking on Bajaj Finance. The other one is Escorts came out with a strong set of numbers. Margins, the number does indicate that there is definitely rural recovery that's happening in decent top line growth. Margins are almost 13%. So some of the funds have been active on Escorts post the numbers. And finally, Larsen & Toubro is the last one. It's up 1.5% ahead of the budget. Some of the HNI, some of the funds are accumulating. They anticipate strong measures that will come in terms of infrastructure development, and the best play there is L&T. So ahead of the budget, more like a budget play, L&T has been bought into.
Oh, okay, well, watch out for Larsen & Toubro as well. So, well, more like a budget play, and it's not had tough days the last few. I mean, maybe an odd day or two where L&T would have pulled back, but otherwise Larsen & Toubro has been doing rather well for itself too. 1365 currently for Larsen. Okay, what else? I'm intrigued by the move in Nestle. Yogesh, you look at this one, and are valuations a bit of a dampener here, or you think the market will like what Nestle dishes out?
Neeraj, I think the way new product launch have got response, especially into the Maggi range, and the new range is also having a good sort of response from the customers. I think apart from chocolate and the ketchup and the other eateries, which are Maggi is the biggest brand, they are doing very well. Though the second factor would be on the apart from fundamental, that in such kind of a market, when you want to be have a capital protection kind of allocation to the portfolio, and with a high ROE, ROC numbers and consistency should be there, then I think Nestle, which is delivering at least 17-18% growth rate over top line numbers over say a YOY basis, then I think this would be a decent enough. And even the valuation would be rich for all the companies like Britannia, like similar like Nestle, and even if Hindustan Unilever. But the way ROE and ROCs are placed for such company on the MNC ground, this will always command premium. And I think the way other companies like Hindustan Unilever and Colgate have come and the Dabur has performed, Nestle was on the sidelines, and this time we have seen the sharp run up in last 1 year. The way it has performed is just fantastic, and it has recouped all the deficit of this performance. I think it is a good stock to hold.
Okay, good stock to hold. That's Nestle sitting with gains of nearly 3%. Pull up Godfrey Philip. That's at the lowest point of the day, down 9%. Remember, there were media reports indicating how the company's all assets will be put up for sale. Of course, management has denied that yesterday. They gave a press release to the exchanges informing that there are no such plans which are there right now. But what I want to ask you, Yogesh, is after a while, there is some participation coming back from ITC and the debate of how it is, trading way, way cheaper compared to the other FMCG, or maybe 50-60% discount to HUL that we've been comparing to. Is it a good valuation bet, or it's a value trap because it's not done anything in the last 2 or 3 years?
Yeah, Navneet, it has not done anything in last 4-5 years rather. But I would say that everything is priced in right now. But the only thing is when markets are on hype and high, nobody would like to touch the companies which are not performing and not likely to perform. The only hurdles which is every time on the budget day that every now and then there is a hike in the duties for the cigarettes, especially on the tobacco products and the cigarettes. So that's why the company is on the sideline. But I think around 230 those who want to have want to allocate money as a FMCG and a cheaper valuation stock, then ITC could be the one can allocate. But my sense is that rather than in FMCG, ITC would be a least preferred stock to me as well. And I will prefer rather than other stocks where Hindustan Unilever or a kind of a Nestle is available, and that would be a much more preferred stock. But those who want to have a laggard and the leader in the portfolio that can definitely allocate some money for ITC. Budget even could be the one which is just on the corner. So one should wait for that. I think if there is no hike in the duty, then this can see some kind of attraction among traders and investors community. So probably that would be the right day to decide.
Well, Bajaj Finance 4432 and counting, life highs for itself, and days highs 5.25% higher. This would be the best move in some time now. So really strong move. I mean, the slippages and provisions may have risen for Bajaj Finance, but the positives in the numbers far outweigh whatever one or two minor negatives that might be there, and which is why the stock is doing what it is doing. Exceptional show by the big boy. Dixon Technologies numbers on your screen as well. Net profit up. Revenues up 25%, net profit up 49%. You can't fault a company for having that. Now, maybe the market in its own wisdom and select quarters might have anticipated a bit more here and there. I do not know. I don't think we have Bloomberg estimates for this, but the numbers optically look okay. Just mind you that the stock had run up quite a bit in the run-up to the quarterly numbers as well. They expect EBITDA up about 31%. Really, 25, 31, 49%. It's not a bad quarter at all by Dixon Technologies. So they're living up to the billing of delivering numbers. Let's wait and watch if this improves. 3.5% lower though after the delivery of that set of numbers. Well, we'll get to more about this. But it's time to get in closing strategy. And Brijesh, if you had to bet on one top closing strategy, which one would that be?
I think I would bet on Mahindra CIE because if you look at the momentum, it has broken out of its range and closing near the highs. So I think at 178, I would take a long bet for 185, 186 on the upside, keeping a stop loss of 174.
Okay, that's
and one more thing, you were discussing Godrej CP. I think to the viewers, I would suggest to book profits because this stock is resisting at the higher levels of around 750, 760. So advice would be book profits. I think stock might see retracement so around 670, 680 again.
Okay, thanks for sharing that, Brijesh. GCPL has actually come off also from, no, he's not saying sell. Sorry for that. He's saying book profits if you have any long positions in GCPL. Okay, just want to mark a few other stocks as well. Remember, Eicher Motors been weak through, as we mentioned, midway somewhere during the session today, Eicher Motors corrected quite sharply, and it's still, there's no recovery which is coming here. Yogesh, any thoughts? Is a sudden weakness which has crept in, at least in today's session? Of course, last few sessions also it's not done anything, but anything that you're tracking in Eicher Motors?
Navneet, I think market will not like if there is no new model launch in near future. Everyone has announced post BA6 launch and the deadline. But this company is still struggling to have a tie-up and roll the new launches, which has been announced. But I think it will take some more time. Probably that would be the reason. Plus, there is no sales jump into monthly numbers since last, which I have tracked of 10, 12 months, and that is a disappointing one. So probably switching from Eicher Motor to anything else on the value migration, probably within the sector or outside or switching the sector would be the reason why the stock is not performing right now. But earlier also we have seen 19,000 odd somewhere where the stock has hit the bottom. Around 17, 19,000, I think it will be within this level band. It would be an opportunity again to get into, but not as a long term for 3-5 years, but looking at next 4 to 6 quarters.
Would Tata Motors be a good bet then, Yogesh?
Navneet, that's my 2020 pick, and I have really betted big on Tata Motors. Only the thing is, stock has corrected recently because of the China recently, which are they are facing on the viral issue Corona. But that was only the threat. But I think the way Brexit is has been scheduled and post that, and the China numbers, both will do very well for Tata Motors in terms of the JV and the new launches in JLR. And valuation-wise, is the cheapest available stock. They are far behind now from the forex losses they have booked earlier 1-2 years back at 800 million pounds per quarter. And this time I think that is far behind, and probably bright future is there for Tata Motors. And if nothing goes wrong, then I am betting that it can be a 35 to 40% jump in this calendar year.
Okay, Yogesh, that's Tata Motors, by the way, which is, I want to pull up Pidilite as well. The numbers were supposed to come today, and that's seen a good jump in the session. I guess now it's at the high point, cooled off a bit. Brijesh, coming here in the charts, Pidilite 1494.
I think this chart is very much stronger. If you look at the momentum, every time it dips, goes on the positive side very strongly. So I think I would bet long from a positional point of view, not a trading point of view, because from trading point of view, the stop loss slightly deeper to around 1430. But if you want to look for a slightly bigger targets, I think 1650, 1680 is the targets I am eyeing on Pidilite. So the stop loss, if one can manage 1420, 1430, one can take a bet at current level also.
Okay. Well, so interesting set of moves for a bunch of those names. As we look at the broader end of the spectrum, there's Alcala Mines, which is up about 2.5% and trading very close to its 52-week highs as well. So keep that at the back of your mind. That's a good mover. We're talking about how some of the specialty chemical and chemical names have done well. Orcon International up 6%, Fine Organics up 5%. Narayan Rudalaya, of course, we spoke about it, has a good move, and Pidilite on the day of the results is up about 2% as well. So there is strength and more into a clutch of these names as we speak. Yogesh, one word on another stock which is trading, albeit with some with a flat move now, but otherwise was hitting fresh highs. Relaxo Footwear. Any thoughts here?
Neither Relaxo, I don't track, so I won't be able to comment anything there.
Okay, Yogesh, one mid-cap idea, something that you're putting fresh money to work currently.
Still, Neeraj, my bet would be on IRCTC, though the stock is at a new life high today, 1120 somewhere. But still, my concept is that I believe that it will grow by 30-35% for next 2 years. And I won't be surprised if it touches 1350 to 1500 range in next 3-4 quarters. And downside is very protected at this point in time because revenue visibility and the profitability visibility is equally enough to protect the downside. So I think one can ride on this, and even if not having in the portfolio, still can buy and hold for at least 25 to 30% return from the current levels.
Okay, Yogesh, we'll leave it at that. Thanks much for taking the time out and being with us. Appreciate your time. Brijesh, I just want your final thoughts, so we'll just stay on with you for a bit longer and get in your final thoughts before we start, before we wrap up the show. Not a bad day of trade. We are off the highs of the day, you got to mind that, and banks certainly off the highs of the day, but still in the green. About 2/3% in the green for the Nifty and about a 1/3% for the Nifty Bank. The broader end of the spectrum didn't do as well, and which is why the small cap index is 1/4% in the red, but the mid caps up about 0.22%. So not a bad outcome for that space. However, yes, the gains not as pronounced as you would have thought otherwise. What's done well though? Tata Motors up about 6.5%. Bajaj Finance, the rock star today, after results up about 5%, and FinService also gaining as a result of that, up about 3%. Nestle, ITC, Adani Port are amongst the others. Infosys and JSW Steel too have done really well for themselves. What's not done well? Eicher Motors 4.5%. Yes Bank, TCS, HDFC doing okay compared to the others, compared to Eicher Motors, but ending in the red. Ultratech down about nearly 1%. Titan has had some pain, and pharma majors Cipla and Sun Pharma. So Cipla, Sun Pharma, Dr. Reddy's all showing that the pharma stocks came for a bit of punishment in the session today, but nothing as much as I shot. However, broader markets relatively subdued, Navneet, today.
That's right. After a while, we've seen this underperformance coming in from the broader markets, but not to worry. At least for the month, we've seen a good outperformance from Nifty mid-cap as well as small-cap indices. So closing just about flattish. However, there were a lot of movers. So let me begin with the gainers. Biocon had a good session today. There was buying seen, I guess, across the day, and the stock's closing with gains of 2.5%. Marico also had a good session. The stock did witness buying interest from the levels where it opened at, because it is closing at levels of about 344 to 345. Aptec, which had corrected yesterday sharply, saw a big recovery, and this is, I think their numbers will also come out today. So ahead of that, there was some buying coming in at lower levels, 9% gains for Aptec. And you had Aarti Industries, which touched its 52-week high today. So good going there, rallied about 10 to 10.5%, closing at the highest point of the day, which technically is viewed as a positive sign. Then you had M&M Financial, which reacted positively to the numbers. I think the street was pretty enthused with the commentary which came. So 5% gains from this one. DMart is the other one, which saw some buying and closing the day with gains of about nearly 2 to 2.5%, I guess. 2.2%, 1973. And you had Shelby International, which gained about 9 to 10%. So a small cap company, but gaining about 12 to 13% actually towards the end of the session. You had some gainers, but majority of losers as well, but majority of them witnessed profit booking, I would call it. So something like United Spirits, which gained about 14% yesterday, saw some profit booking today. That tumbled about 3 to 3.5%. Bandhan Bank also didn't have a good session, so that one corrected too in today's trade, down almost 2 to 2.5%. Ramco Cements came out with the numbers. It's an outperformer in the last 1 to 3 months. So, and plus, I guess the numbers were also below what the street was expecting. 5% cuts coming in here. And IT Tech also, as a result of earnings, profit booking kicking in, it's been an outperformer, down 4% in trade. Glenmark has been a laggard, I guess, in the pharma pack, not been able to perform at all. So today also it's closing around the lowest point of the day, cuts of 3%. And finally, you have something like Godfrey Phillip, which was inching higher. There were some rumors or news about how the promoters could be selling their stake, and the stock as a result of that was moving higher. But today it came under pressure, down about nearly 9 to 10%. 1240 is where Godfrey is closing. But clearly, after the selling pressure that we've seen for Indian markets in the last 2 sessions, it's been a good rebound today. At least Nifty's closing around its 50 DMA, Neeraj.
Yeah, and it shouldn't be bad news. I mean, the Dow futures and of course, they'll move maybe a little bit if indeed the Fed throws up some surprise, but as of now, nothing too untoward anticipated, Navneet. But let's get the turnover, the penultimate day to the expiry, the monthly expiry before the budget, and you would expect the turnover to be high. Even the cash market turnover, well, 30-35 is anyways anticipated.
Last 2 days, I think it's in the territory of 37 to 38.
Yeah, not bad. And FNO turnover anyways anticipated to be high. These days, we are now getting used to some very high turnover numbers. The market breadth may not have been the most perfect in the session today, though. You probably have some convergence, though. Well, it still ends in the for the green throughout the session today, Navneet.
Right, and I guess the volatility also cooled off, though definitely it can move higher tomorrow being the expiry day, and then you've got budget on Saturday. But 5% correction is definitely a good sign for the bulls if the markets were to move higher even from current levels. So 16.4 is the mark. All right, on that note, let's get you some closing thoughts from Brijesh. Brijesh, what do you do tomorrow if the markets were to open flat? Do you expect more recovery to come from the current levels, and do you expect levels of 12,200?
Yeah, certainly, because if you look at the derivative structure of 12,100 call, we have seen huge unwinding of around 15x of OI, and if you look at the 12,000 puts and 12,050 puts, we have seen huge writing over there. So I think from 12,050 might act as a good support, and from tomorrow if open flat, keep a stop loss of 12,045 on the spot level and look for 12,200, 230 on the upside.
Okay, let's see if we can reclaim that level of 12,200. I think that'll be the first resistance. Your 20 DMA is also placed somewhere around that. Brijesh, we leave it on that note. Appreciate you joining us and taking us through all the technical views that you've shared with our viewers. And with that, it's a wrap on this edition of Countdown. It's goodbye from Neeraj, my side, and the entire team who put the show together. You stay tuned. Market Wrap comes up next.